we got oil trading off here a little bit today. Maybe a little bit of optimism about getting some type of resolution here. Let's just say, for the sake of argument, Mike, we get the tweet that it's all over and our ships are coming home. What is oil? How does oil trade in the days after that?
Collapse. It's already a good indication for that, Paul. I think it's reached a pretty good peak around 120. It's probably stuck between 80 and 100 for a while. But natural gas has already done it. It's the same thing it did in 2022. It was up 100% in the year. And now year over year, which is because it's seasonal, you have to measure, it's down 20%. And the natural gas is the #1 source of heat, electricity, and fertilizer in this country. So it's just a matter of time. You think that Mr. Trump figures out how to get this price lower for midterms, which is what he needs. He has supply and demand in his favor. So I look over that December WTI crude oil contract. It's at $75 a barrel. I still think it's more likely to head towards 50 by the time we get the midterms. And the key fact is things are in his favor. Something really bad has to happen in the Gulf, and something really bad has happened already. It's closed for 2 months. That's a shocker.
It's certainly been a shocker. When you look at the futures contracts that expire later in the year, you point out, and you've been very consistent doing so, that the prices there are much lower than the front end contract. Does that look the same for Brent, Mike?
It does. Brent's a little higher because of the normal premium, but I think the key thing to focus on here, Scarlett, it's not just natural gas, it's not just crude oil, but the other sources of energy in this country, biofuels for corn and soybeans, which is peak season for peaking. They have positions that are very long. Hedge funds are very long in these positions, hoping for prices higher, yet they bumped up the really good resistance. And around corn, that's around $5 in the December contract. And in soybeans, around $12. For those markets to go higher, they need crude oil to go higher, yet they typically go down. And also, they're sources of fuel. So everything is predicated on crude oil staying up, yet positions are long. And I think the normal thing is that usually happens in commodities like this is they autocorrelate and they go down because they went up. So to me, the risks are we go back down and head towards, certainly towards the end of the year, much lower levels.
What's the #1 call you have these days on commodities, Mike? You cover everything. So what are you looking at the most these days?
Two key themes, Paul. Elasticity, the elasticity of crude oil and natural gas and grains to go lower after going higher, and dependency. That's the key theme in the metals. The whole metal sector, from gold down to platinum and palladium, is almost completely dependent on that stock market going higher. They're so highly correlated. Gold's bait in this space, and right now, gold is just a highly volatile speculative asset. It's 180-day volatility, 2.3 times S&P 500 is the highest since 2006. Remember what happened after that? So they're almost completely dependent on the stock market going up. So to me, that's a key theme. If the stock market drops a little bit, we'll see some pretty severe deflation in commodities.